This is your LMAX exchange technical update for Tuesday, May 30th, 2017. Eurodollar. So the euro is showing signs of exhaustion following a recent push to fresh 2017 highs, though the uptrend remains firmly intact, and there is risk for additional upside over the coming days towards the next key barrier above, which comes in the form of the August 2016 high at 113.67. However, in the interim, there is risk that this correction extends lower, with room even to drop back towards the 110 area, some previous resistance now turn support for a higher low and continuation of gains up towards 113.67. Ultimately, it would take a break back below 108.40, a recent confirmed higher low, to negate the bullish outlook. Sterling dollar. So cable has come back down to test its previous major resistance, now turns support at 127.75, though there is still scope for corrections here to extend down into the 125 area before the market looks to trade higher towards what is now a measured move upside extension in the 135 area. At this point, if we do see setbacks, they should be limited to the 125 area, with only a break back below 123.60 to negate the newly adopted constructive outlook for sterling dollar. Dollar yen. So dollar yen has been chopping around over the past several sessions, but overall the market remains pressured to the downside since stalling out well ahead of 115 several days back, with the focus now on a retest of the 2017 low just shy of 108. At this point, it would take a break back above 114.37 to take the pressure off the downside. Euro Swiss. So Euro Swiss has traded up towards some major psychological barriers at 110 in recent trade, but has stalled out ahead of that barrier, with the possibility that the market wants to once again roll over back towards some range lows down towards 106. At this point, overall, while the market holds below 110, the pressure does remain on the downside, though a break and close back above 110 would be a highly constructive development and could suggest a significant shift in the structure, opening the door for significant upside over the coming days and weeks. Aussie dollar. So Aussie has been trading lower over the past several days, with the market putting in lower tops and lower lows, and so this latest rally is expected to be very well capped here above 75 in favor of a continuation of declines, with the break back down below some recent support, which comes in around 73.30 to strengthen and confirm this outlook and accelerate declines down towards next key support in the form of that medium term levels, those lows that were seen back in December of 2016 at 71.60. Here, only back above 76.11 would compromise this outlook. Dollar CAD. So dollar CAD has finally found some support after the market had pulled back from 2017 highs, with the market now looking to base out in the 133s, really around 134, in favor of a continuation of gains and higher low. A higher low would be confirmed, of course, if we break back above the recent 2017 high at 137.94, which would open the door for a push beyond 140, looking at the measured move extension. Ultimately, with this market, if we do see any additional setbacks, they should continue to be very well supported, with only a break back below the 132.20 area to negate the constructive outlook for dollar CAD. Kiwi dollar. So the New Zealand dollar is trading up into some key resistance here at 70.90. That was the high going back to the 21st of March. But while the market holds below this level on a daily close basis, there is risk for another topside failure as this market continues to show signs of topping out on a more medium-term basis, and for a resumption of declines back down towards and below the recent 2017 low at 68.18. A break below there would expose a drop into the 65 area. If we do see a close back above 70.90, it doesn't necessarily push the outlook to a more bullish outlook. It just takes the immediate pressure off the downside, with rallies still seen well capped. SPX 500. The S&P 500 continues with its impressive push over the past several years, trading up to fresh record highs, and so this latest break and establishment above 2400 exposes a measured move upside extension towards 2480 in the weeks ahead. At this point, it would take a break all the way down back below 2322, a low that was seen back on the 27th of March, to negate the highly constructive outlook and force a shift in the structure. Gold. So gold has been putting in a series of higher lows and higher highs since basing out in 2016, and the market is now looking for that next higher low in the 1215 area, which will be confirmed on a break above 1296, exposing an eventual push up towards a retest of the 2016 high at 1375. At this point, only back below the 1215 area would compromise this highly constructive outlook for gold.